Ladies and gentlemen, good day and welcome to Max Ventures and Industries Q3 FY22-23 results earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sahil Vachani, Managing Director and CEO, Max Ventures and Industries. Thank you, and over to you, Mr. Sahil Vachani.
Thank you, and good evening to all. Thank you for joining us on the Max Ventures and Industries Q2 and H1 FY23 earnings conference call. Along with me today, we have our CFO, Mr. Nitin Concall, Mr. Rishi Raj, who is the Chief Operating Officer, and Mr. Rohit Rajput, who is the CEO of Max Asset Services. We also have SGA, our Investor Relation Advisors, on the call. The presentation and press release has been issued to the stock exchanges and uploaded on our company's website. I hope everyone has had the opportunity to go through this. I'm delighted to share that during Q2 FY23, the total revenue for the company increased by 80% year-on-year to rupees 274 million. EBITDA has doubled year-on-year to rupees 83 million, and PAT increased to rupees 50 million as compared to a negative rupees 26 million PAT in Q2 FY22. The robust results were on the back of a strong increase in lease rental income led by higher occupancy on a year-on-year basis, as well as a sale of a unit in 222 Rajput. Let me now share the strategic overview of the company as where we stand today. The company has built a strong portfolio of projects which will fuel the next level of growth. The company has entered the Gurugram with 1.6 million square feet commercial development opportunity. We plan to develop a best-in-class Grade A commercial space on this land parcel. This will enable us to achieve our aspiration of becoming a leading commercial real estate player in the Delhi NCR region. We've also entered into the residential real estate segment with the acquisition of a 10-acre land parcel in Noida. We plan to launch the first luxury residential offering in the first half of the next calendar year, which we estimate to have a sales potential of over 1,300 crores. Max Asset, through its SPV, has also successfully bid for the 2 land parcels being auctioned by Axis Bank. Both land parcels combined are spread across 4 acres located in Sector 129, Noida, and these land parcels are located contiguous to the existing Max Square development. This will enable us to create a 6.6-acre office-led multi-use campus, and the total development size, including Max Square, will be close to 2 million square feet. These new parcels have direct access from the Noida Expressway, offering excellent connectivity to and from Noida, Delhi, and the broader Delhi NCR region via both road and metro. In terms of our completed projects, Max Towers and Max House Phase 1 are now 100% leased at 25 to 30% rental premium to the existing micro market. The latest leases signed were at more than rupees 130 per square foot, setting the path for the next round of re-rating. On the composite scheme of amalgamation, wherein it's proposed for Max Ventures to merge with Max Estates Limited, the company has received the approval from the stock exchanges and has filed the first motion petition for merger with NCLT in Chandigarh. NCLT has ordered to convene a meeting of the shareholders of Max Ventures and Industries Limited and a meeting of the secured creditors of Max Estates on the 3rd of December 2022. We anticipate this amalgamation to be completed within the next 6 months. This will simplify the corporate structure and also enable us to rename the entity as Max Estates, a move that would resonate directly with our real estate aspirations and the deep focus of the company. I'd also like to share a little bit about our purpose and operating philosophy underpinning the expansion of our real estate portfolio. On the commercial real estate front, we have successfully delivered on our promise enabled by the Work Well philosophy at both Max Towers and Max House. The Work Well philosophy is aimed to ensure holistic well-being of office users, emotional and physical well-being by curating an ecosystem of spaces, including a host of amenities that while delivering impeccable service standards and focusing on sustainable development. The impact of this is evidenced not only in the 100% occupancy, but also the premium and the customer experience that we've been able to offer. We aspire to replicate this and also better it in our new developments, Max Square and Phase 2 of Max House as well. In terms of the Live Well philosophy for residential spaces, we envision a living ecosystem that enhances and enriches the quality of life of its occupiers by building a confluence of spaces that promote sustainability, enables comfort, healthy living, and community experiences while ensuring physical and emotional well-being. Close attention will be paid to elements like air, water, safety, biophilia, and many other elements that go into every stage of planning and execution, from design to operations of our spaces, leading to an unparalleled experience for our occupiers. With this, I'd like to hand over now to my colleague Rishi, who's also our COO, for a detailed business update. Thank you. Over to you, Rishi.
Thank you, Sahil, for the strategic overview. Let me first give you the project-wise business updates and then move on to the development pipeline. Let us start with Max Towers. Total leased area owned by Max Estates in Max Towers is now 100% occupied with leased area of 3.02 lakh square feet. Lease rental income from Max Towers increased by 15% year-on-year to rupees 84 million in Q2 FY23. For H1 FY23, lease rental income increased by 10% year-on-year to rupees 155 million. For full year rental of Max Tower is expected to be about rupees 350 million in FY23. Moving on to Max House Phase 1. Max House is 100% occupied as well with the total leased area of 1.05 lakh square feet. Lease rental income from Max House increased from rupees 5 million in Q2 FY22 to rupees 35 million in Q2 FY23. In the first half of FY23, it increased from 11 million in first half of FY22 to 73 million in Q2 FY23. Full year rental for Max House Phase 1 is expected to be in the range of rupees 150 to 160 million in FY23. Coming to assets under development for Max Square, work is on track and is expected to be completed by Q4 of FY23. The company has already received fire NOC and expects to receive occupancy certificate shortly. The company has got a robust pipeline of leasing for Max Square and is confident to fully lease in next 18 months. For Max House Phase 2, work is on track and is expected to be completed by Q2 FY24. This is being built on similar lines to Phase 1 with a larger leasable area of around 0.15 million square feet. We have already received interest from existing tenants looking to expand within the campus itself. The weighted average monthly rental continues to be at a significant premium to the respective micro market for both the office assets, currently at rupees 106 per square feet per month for Max Tower and rupees 125 per square feet for Max House. However, as mentioned by Sahil, the latest lease signed at both these projects were higher than rupees 130 per square feet per month. Hence, the future income potential for both Max Towers and Max House has significantly increased. Now let me move on to the commercial development which Max Estates has signed up. During the last quarter, company acquired 100% of equity of Acreage Builders Private Limited at an enterprise value of 322.5 crores. This company holds a license to develop commercial projects over an area measuring 7.15 acres located on the main golf course extension road one of the most promising upcoming micro markets for office in Gurugram. Max Estates plans to develop a build-to-lease Grade A plus commercial space on this land. The potential leasable area is around 1.6 million square feet. The current transaction will enable Max Estates to achieve its aspiration of becoming a leading real estate player in Delhi NCR region. Also, New York Life Insurance has been onboarded for Max Square Phase 2 project as an equity co-investor. The addition of 4 acres of land in the same SPV will enable a combined development of 6.6 acre of mixed-use campus along with Max Square Phase 1. New York Life has committed to invest rupees 196 crores for a 49% equity stake. Max Estates will be responsible for the final delivery of the project and will be entitled to a development fee on the same. From a market perspective, office leasing has bounced back and is expected to close at a pre-COVID levels, both pan-India and in Delhi NCR. Net absorption just for Q2 FY23 recorded at 9.86 million square feet, up by 11% quarter-to-quarter and up by 58% on a year-on-year basis. New completions were recorded at 11.9 million square feet in Q2 FY23, up by 8% quarter-on-quarter and 9% year-on-year. Mumbai and Delhi NCR led the gross leasing number for Q2 FY23, accounting for 26 and 23%. Like for Pan-India, NCR is estimated to reach pre-COVID levels of 8 to 10 million square feet of gross leasing in the current year. Now let me move on to the residential development which Max Estates has signed up. We have acquired 100% equity in Accord Hotels and Resorts Private Limited for an enterprise value of INR 306 crores, which holds a 10-acre land parcel in Sector 128 of Noida. We plan to develop a mixed-use luxury residential project on this land parcel, which will have an estimated sellable area of approximately 1 million square feet and sales potential in excess of 1,300 crore rupees. The project is planned to be developed in 2 phases and will cater to premium end of the residential market. The first phase is planned to be launched in the first half of next calendar year and expected to be delivered within 3 years of the launch. Project will comprise 200 to 250 premium residential units with only 20 to 25 number of residences per acre, which will be one of the least dense residential communities in Delhi NCR. Inspired by our Live Well philosophy, as explained by Sahil earlier, the project will have curated mix of best-in-class amenities focused on community and recreation, health and wellness, and sustainable living. For residential housing from a market perspective, we are seeing sales crossing peak that the market had seen over last decade. NCR's residential market in Q2 FY23 witnessed a sale of 11,000 units plus, up 21% year-on-year. It also saw launch of around 10,000 new units, up 28% year-on-year. All markets saw average prices consistently increasing for last 3 quarterly periods. With this, I hand over the call to Rohit Rajput, our CEO of Max Asset Services.
Thank you, Rishi. Max provides end-to-end managed office services, including but not limited to fit-out leases, fit-out design, and build and office operations of pantry, housekeeping, IT services, etc. Our managed flexible office offering Workwell Suite Center at Max House Okla is now 100% leased. Witnessing a strong response at Max House, we will strongly evaluate keeping Workwell Suites a part of our upcoming offerings by Max Estates at both Max Square and Max House Phase 2 as well. As a part of our Workwell philosophy, we continue to differentiate our client experience by adding more amenities like fitness centers, salon, an early learning center, shuttle services, badminton court, etc. We continue to curate various F&B options as well as community events, including intercompany sports tournaments to create a unique ecosystem for our clients to truly work well. With an aim to uplift our assets with the best-in-class facilities and becoming more operationally efficient, we are deploying various digital tools across all verticals, such as parking management, lift management, amenities booking, visitor management, and air quality monitoring. I'm happy to share revenue for MAS more than doubled year on year in Q2 FY23 to rupees 80 million. In H1 FY23, revenues have grown by 118% to 155 million. We expect the facility service business of MAS to witness strong growth in FY23 as a high percentage of offices are now open and expected to avail of our services. With this, I hand over the call to our CFO, Nitin Concall, for financial updates.
Thanks, Sohail. Good evening, everyone. Now, let me first give you the financial highlights for Q2 FY23. Consolidated revenues for Q2 FY23 increased by 80% year-on-year to rupees 274 million. Consolidated EBITDA increased by 104% year-on-year to rupees 83 million in Q2 FY23. Consolidated profit after tax stood at rupees 36 million in Q2 FY23 as compared to a loss of 21 million in Q2 FY22. Now let me give you the financial highlights for the half year H1 FY23. Consolidated revenues for H1 FY23 increased by 62% year-on-year to rupees 548 million. Consolidated EBITDA increased by 64% year-on-year to rupees 170 million in H1 FY23. The consolidated PAT stood at rupees 100 million in H1 FY23 as compared to a loss of 21 million in H1 FY22. Speaking about our liquidity position, gross debt stood at rupees 5.3 billion as on September 22. Cash and equivalents stood at rupees 3 billion as of 30th September 22, hence a net debt of rupees 2.3 billion rupees. At the start of this year, we had a cash and bank balance of rupees 4.7 billion, which was from the sale proceeds of our packaging films business. During the year, we further raised funds from the lease rental discounting of our lease assets and are planning to deploy the cash as follows. Rupees 3 billion for acquisition of 100% equity in Accord Hotels and Resorts Private Limited, which has now been subsequently renamed as Max Estates 128 Private Limited, which holds a 10-acre land parcel in Sector 128 of Noida. Rupees 3 billion for acquisition of stake in Acreage Builders Private Limited for developing the best-in-class Grade A commercial office space on this land in Gurgaon. I would now request the moderator to open the floor for question and answers.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question comes from the line of Faisal Hawa from HG Hawa & Co. Please go ahead.
So, sir, how many these projects in Noida? There are a lot of companies which have gone bust, and they are particularly in the real estate sector. So, what is the possibility that we could acquire a lot of such projects from through NCLT or even through banks? And are we in constant talks with any of these institutes to really get our revenues going much faster? And second point is about this New York Life arrangements. Will this be like a constant arrangement for other projects also? And are they ready to put in unlimited amount of money?
Hi, Fazil. This is Rishi. I'll take those questions. Just to put our growth trajectory into perspective, we ended FY22 with 1.5 to 2 million square feet of development portfolio. With the recent acquisitions that we have announced and what is clearly in our line of sight between Noida and Gurgaon, we expect to end FY23 with 7 to 8 million square feet of portfolio across asset classes, geography, and risk spectrum. So that in itself is almost 3 to 4 times of growth in last 12 months from a development portfolio perspective. Coming specifically to your question about Noida, you are absolutely right. Noida, like overall Delhi NCR, has seen significant churn in terms of incumbent developers, and that actually presents a significant opportunity for us to consolidate and become, as per our aspiration, a leading player in Delhi NCR. In Noida in itself, we recently announced 4-acre acquisition of a land which was with Axis Bank, which they got as a part of debt asset swap with JP. And also, we have an acquisition in pipeline, as you rightly said, through the insolvency process, which is Delhi 1, wherein the hearing on the plan has already begun. We will continue to evaluate, as we have stated very clearly, our aspiration is to grow our residential and commercial portfolio by 1 million square feet each every year on an average. In light with that aspiration, we will continue to evaluate similar opportunities in Noida and outside Noida in Delhi and Gurgaon as well. So that's to your first question. On second question, New York Life remains committed to grow and deploy capital as we grow our commercial real estate footprint in Delhi NCR.
And in FY25 or FY26, is there a good chance of the land which is owned by the promoter and near the airport being also put into development under the Max umbrella?
So on that, as you are aware, it is going through a land pooling process, and at this point in time, the land which has been pooled, and the land is in Sector 3 Zone L of Delhi. The land which has been pooled is going through the verification process. The first step is for the entity which owns the land to receive the notice to form consortium. Indications are very positive for that to happen soon. And from there on, it could well be 24 to 36, 18 to 24 month kind of a process for the final license to happen, and thereafter the development process can begin.
So FY25 good chance?
We will not like to speculate at this end. I think the first thing first, let the notice to form consortium come, and then we will start the process for forming the consortium implementation plan, and thereafter we will be able to give you a more firm update on our plan as far as that particular opportunity is concerned.
Thank you very much for answering so well my questions.
Thank you. Next question comes from the line of Prachi Sharma from Ace Investor. Please go ahead.
Hello.
Yeah, please go ahead.
Am I audible?
Yes.
Yeah. So my first question is, what would be the current capex for FY23, and what will be the capex for the next couple of months, for the next couple of years? Sorry.
So, Paki, this is Nitin Concall. For the current FY23, we would have capex which in the range of 100 to 120 crores, which would be for the completion of the Max Square Phase 1 project and completion of the Phase 2 of Max House, Okhla. This capital will be deployed over there. In next couple of years, as Rishi mentioned, we have announced commercial projects in Noida and Gurgaon, for which we are doing a detailed capex assessment. We would be able to give our numbers on the capital deployment for them in the coming calls. Of the land which we have already acquired for them, for the land at Noida for the residential, we have paid an amount of rupees 306 crores for acquisition of the land. And post the quarter ending, we have paid around 322 crore rupees, 315 crore rupees for the acquisition of the acreage land in Gurgaon.
All right, sir. This is helpful. My second question is, what is your outlook on the residential real estate business, especially in the NCR region where we are present right now?
The outlook, Prachi, is very, very positive. I think the numbers speak itself. If you just look at, let me just share a couple of numbers with you. If you look at Pan India, and if you look at year-to-date calendar year 2022, in terms of number of units sold, is 230,000 units sold in 9 months, and the estimate is, which is already past the full year 2021, and the estimate is that this year will become near to the peak that the India has seen over last 1 decade. And similar story is there for Delhi NCR as well. Again, if you look at the number of sale for year-to-date calendar year 2022, it's 39,000 units, well past full year 2021 of 21,000 units, and again inching towards becoming one of the highest that the NCR would have seen over last 1 decade. So overall outlook is positive, and one of the things I would call out is a large part of this demand is really end user driven and hence very sticky, and is also and one could also see a reflection of that in developers being able to consistently improve the pricing, also to absorb rise in the commodity prices. So overall outlook is pretty positive. We expect this to continue for rest of the year and in the next year as well.
All right, sir. Thank you so much, and all the best for the coming quarters. That's all from my end.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Deepthi Kothari from Kothari Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. So my first question was that in terms of leasing, what is the expected space for leasing in million square feet in FY24 and FY25?
Look, from a leasing perspective, if you look at what do we have in portfolio from a FY23-24 perspective, is Max Square Phase 1, which is around 0.7 million square feet, and Max House Phase 2, which is 0.15 million square feet. Max Square Phase 1 is getting completed quarter 4 of FY22, and Max House Phase 2 is getting completed in quarter 2 of FY24, right? So both of these assets have very robust traction from a leasing demand and leasing pipeline perspective, and we are very confident that in next 2 years, both the assets will get fully leased.
Okay, sir. And so what rentals are you expecting in FY24 and FY25 going ahead on an overall basis?
So, look again. If you look at Max Towers would be clocking 35 to 36 crores.
Yeah.
Max House Phase 1, 15 to 16 crores, and the expected rental for peak rental for Max House Phase 2 is 22 to 23 crores, and Max Square Phase 1, the peak rental is estimated to be at 60 crores.
Okay, sir. Thank you so much. That answers my question.
Okay? Thank you.
Yes.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Riya Verma from NR Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. So firstly, what is the update on the Delhi One project?
So on Delhi One, as I was mentioning in response to the previous question, our plan, the resolution plan, is with NCLT. All major objection has been removed. The progress from the last call till date is that the discussion on the plan per se has begun, and we are expecting a series of such court hearings to happen over next few months for us to get clarity on the timeline for plan approval. And other major development has been, which you may be aware of, that Supreme Court has adjudicated Noida as an operational creditor versus their ask of financial creditor, which is giving further fillip to the progress of plan hearing and plan approval.
Right. Thank you. And secondly, for the commercial project in Gurgaon, are we looking to get a partner on board? If yes, then by when do we plan to get them on board?
Yes, we are looking to get partner on board, and we will soon update you in that regard. The expectation is to have that on board in this financial year itself.
Okay. And just one last question. With increasing interest rates, how will this affect our business and our costs? Also, do we see a demand issue because of this?
Okay, so there are two parts to that question. One part, which I guess is more related to residential business from a customer sentiment and demand perspective, and second part is to do with cost of development. So I'll request Nitin to start with cost of development, and then I will take up the customer piece.
Sure. Thanks, Rishi. Riya, in terms of cost, while underwriting our projects, we do a thorough assessment of how the interest rate, what is the interest rate looking forward to. And when doing an assessment of those, we bake in a certain increase in interest cost from the current and underwrite accordingly. On the sales part.
So from a residential consumer sentiment standpoint, if you look at what has happened, India has seen now 190 basis point of interest rate increase. Despite that, what you see happening in the market, if you look from a historical perspective till date, this has not dampened consumer sentiment. The demand or the absorption actually on a quarter-to-quarter basis has only gone up. And as I was mentioning the numbers as a response to my previous question, this year is expected to really reach a peak that India has seen over last decade, both at an India level and NCR level. And we expect the consumer sentiment with respect to residential demand to remain positive, because one of the big change we are seeing this time with respect to upsurge in demand, particularly post-COVID, is to do with this is all end user driven, and also there is a significant shift in the mindset from renting versus owning, and the trend towards owning, and the trend towards, there's the second shift, and the third shift that we are seeing, which is where we believe we have a sweet spot, is demand is navigating towards credible corporate developers with quality development. So what we saw happening in the commercial office market is also now playing out in the residential market, and in both segments, we feel very positive and confident with respect to demand for the products that Max Estates will bring online.
All right. Thank you. That was helpful. Thank you and all the best.
Thank you.
Thank you. Next question comes from the line of Anup Shah from Srinath Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. So wanted to understand what is your outlook on the commercial real estate business?
That's a great question. Let me again start with the numbers itself. If you look at calendar year 2022, both at a pan-India level and at Delhi NCR level, we are estimating the full year absorption to reach pre-COVID 2019 level, which for NCR is in the range of 8 to 10 million square feet. That's number one. Number two, yes, there are global macroeconomic concerns playing out in US and Europe. In our view, that at an overall market level may have some impact on decision making. Having said that, if you come to a micro level and look at where we are planning for our new products, it's Noida Expressway and Golf Course Extension Road. Both these micro markets are $1 micro markets, the two most important vectors in Delhi NCR. And in both these micro markets, if you look at existing stock and upcoming supply, a significant proportion is what we call strata sold or fragmented sold asset, not lending itself to quality development and experience. And third, in our experience of Max Towers, Max House, and the demand that we are seeing for Max Square and Max House Phase 2, the occupiers are all navigating and gravitating towards a grade A plus assets where they can be assured of quality experience. And that continues to give us a lot of confidence in terms of uptake of our office assets in both of these micro markets.
Sure, that helps. Another question was, what is your opinion on the current rental rates? And do you see a further increase or decrease in these rates in the next few quarters?
On rental rates, again, the devil is in detail. If you look at rates at a overall market level, post-COVID this year, rates have started inching up, but that's at the overall market level. So the good news is it has started inching up. If you go a couple of levels granular, and let me illustrate, the best illustrated is with the help of our Max Tower experience. Pre-COVID, we started the rental for Max Tower at 85 to 90 rupees, averaging at 106 over the COVID period, and post-COVID, the last lease that we did is at 130 rupees per square feet. So there is a substantial jump which factors in market sentiment, but more importantly, the flight to quality and demand consolidating to quality developers and quality developments which are far and few.
Okay, so that's it from my side. Thank you.
Thank you.
Thank you. Next question comes from the line of Rakesh Ambedkar, an individual investor. Please go ahead.
Yeah, hi. So thank you for the opportunity. I have two questions. First one is, can you share your thoughts on your capital allocation strategy between real estate and residential projects?
So, Rakesh, as you would see, we entered into the residential space in June of 21. Post, we have recently announced a project in Gurgaon, in Noida, sector 128 was residential. Going forward, we would be doing we would be allocating, we will do an equal proportion of capital allocation on residential and commercial. But this will be a function. We will be doing an equal allocation in the residential and commercial going forward on the capital allocation side.
Okay, that helps. My second question is more strategic on dividends. So can you share your thoughts on the dividend distribution?
Sorry, dividend. Yeah. So, Rakesh, currently we are into a growth phase and deploying our capital on the expansion of the business. But this has been a constant clamor from the investor community to us on the dividend. Currently, we intend to deploy the capital more on for the asset expansion as a growth story of the business. Going forward, we'll come back to the investors with the dividend in the coming years.
Okay, will. Okay, thanks for the question.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Niyati Shah from NM Securities. Please go ahead.
Thank you for the opportunity, sir. I just had one question. Can you elaborate the cash that we have deployed in the last 6 months, and how will we be deploying the remaining cash going ahead?
So, in the last 6 months, the cash we deployed is the first project which we acquired was in the first quarter of the current financial, in which we acquired 100% shareholding for a land of residential project in Noida, sector 128, which was 306 crores. Subsequent to the quarter, post the quarter, we acquired 97% shareholding for a company called Acreage, which owns land for a commercial project in Gurgaon for 322 crores. And going forward, we have also been declared as the successful bidder for a land which was auctioned by Axis Bank for an amount of 220 crores for the 4 acres of land. This is the capital which has been deployed as of today. Further, on the land for which we have been declared as a successful bidder, we have got New York Life as a 49% equity partner, and they have committed to invest an amount of 196 crores on the sector 129 Max Square Phase 2 project.
Okay, sir. That was helpful. Thank you.
Thank you. As there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to Mr. Rishi Raj for closing comments.
Okay. I hope we have been able to answer most of your queries. We truly look forward to your participation in the next quarter. And if you have any further queries, you may contact SGA, our Investor Relation Advisors. Have a great day ahead. All the best, and thank you.
Thank you. On behalf of Max Ventures and Industries Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.